Welcome back again, friend. Friend, the Union Budget 2025 has brought about several key changes in the income tax bill, especially those impacting non-profit organizations and area that plays a crucial role in societal development and often comes under scrutiny from the tax authorities. To help us decode and understand these important amendments, we are fortunate to have with us CA Vipin Batavia ji, a highly experienced professional known for his deep expertise in taxation and regulatory framework, especially for charitable and non-profit entities. Today, he will guide us through the nonsense of new provisions, practical implications, and compliance challenges that lie ahead for NPOs under the amended law. So, without further delay, I now request our past convener, Sri Kamal Danka, to give a brief profile of our speaker before you.
Good morning, friends, and welcome back to new renowned venue of Coin. Thank you, convener, for giving me this opportunity to introduce my teacher in profession and my friend CA Vipin G. Batavia. He passed his chartered accountancy in 1985. He is practicing in the name of Vipin Batavia and Company. His main area of practice is direct tax, audit, and charitable trust, and all areas in the field of charitable trust, NGO, clubs, and association. He was president of Chamber of Tax Consultant in the year 2003-4, now a 100-year-old tax professional body. He was office bearer in CTC for more than 5 years, chairman of various committees, and was also chairman of General Committee of CTC for 3 years, publishing Income Tax Review. Was actively involved with various committees of BCA, Bombay Chartered Accountant, and WIRC. Achieved expertise in the field of charitable trust, handling every matter pertaining to charitable trust institution, including charity commissioner, income tax, FCRA, and CSR. He is co-author for various books on charitable trust published by Chamber of Tax Consultant. He is regularly delivering lectures with various professional bodies, CTC, Jabinagar Study Circle, BCA, and WIRC, and many others. He has written articles in various professional magazine newspapers on various topics, particularly on charitable trust and association. He is also philanthropic, proactive in charitable activity. He is running his own charitable trust. He was National Secretary of All India organization called Dharam Bharti Mission. Please welcome him with a round loud of applause.
कॉलर माइक पॉइंटर भी है।
चलेगा ना?
हाँ ये भी चलेगा, ये चाहिए यार।
लेकिन मुझे ये बुक रखने के लिए
हाँ यार,
तो फिर ये अच्छा है। अभी ये दे दे। ये ना सही।
हाँ ये यस।
हेलो। Good morning, friends.
Good morning.
First of all, I thank JV Nagar Study Circle for inviting me to speak on my favorite subject. I think that is my main area of practice. I practice only on charitable trustee. Convener Mr. Kailash Karke, Deputy Convener Mr. Lalit Bansal, my very dear friend, coordinator Mr. Kamal Naranga. I think he is permanent coordinator. Thank God, one is devoting so much of time and efforts for the study circle for our fellow members. And Mr. Gupta in his absentia and dear friends. Friends, I have been given a bigger size of memento. I said, the time has come that such memento should be smaller, like zip system. So it should go on reducing the smaller and smaller. But when I realized, convener said, okay, it is JB Nagar circle, and here this is a practice. I said, I pray to God that let this group grow furthermore, so that more bigger mementos can be given. Friends, Kamal called me because I think this is third or fourth time I am speaking to this study circle. Same topic, different aspects. That we have to keep a lecture on charitable trust. You decide the topic. I said, yeah. Recently, our new bill has come, new income tax bill. All NPO provisions are also under the new bill. Still it is bill. Tomorrow it might become act. Because tomorrow is going to be placed in the. So I said, this is at that time when we were discussing, those details were not there. But we knew the standing committee has already gone through and finalized the proposed changes further in the bill. And this topic is really now going to be acted, because the manner in which things were moving, the standing committee was moving. One day I went to income tax, one DC IT was preparing something with the book, so many. I said, what are you doing in this? Well, I am preparing, just 3-4 months back, I am preparing the rules for the new bill. So then it struck to me that the government is really working in a systematic manner, And the date which they have given 1st April 26, I think, and now it is clear also. It is going to be implemented from 1st April. So we have at least 6 months time before it implemented. Because NPO is a part of that. But we will be concerned about the whole Income Tax Act. We all have to learn again. But the basic principle, in fact, the chairman, Mr. What is his name? Very odd name is. Bridge, Yadav, something his name, no? Who is heading the standing committee? Anyhow, he has said that we are ready for that. We'll be submitting around 17th of July. They finalized the committee meeting was there. They finalized the amendments or proposals, and bill is going to be presented tomorrow in the parliament. And I think without any further problem, there are few things, particularly the privacy of the SSE, because now they have continued, in spite of suggestions, they have continued to have that income tax officer, but during the search, it is not otherwise. So there was a misconception between our mind that it is everywhere they can go and search your computer, your WhatsApp, your other social medias and find out for tax evasion. Now the tax collection has reached to that extent that they can peep into your personal positions. Anyway, there were 3 simple principles based on this whole bill is brought in. Number 1 is the textual and structure simplification for improved clarity and coherence. Say there will be a clarity in that. No modification of tax rate, which is aimed at preserving permanently, so that people have not to worry about their taxation. To eliminate redundant and repetitive provisions. We have seen in the Act there are many redundant provisions, there are many provisos, many explanations, because went on since 61, went on amending the law as per the judgment and problems, and they went on clearing all these things. So now they want to clear those things, and only the current law they want to put in the simplified manner. It had opted simplified language. That is what they claim. But if you see the provisions, the language, no doubt, they have tried to simplify it, but it's not that simple. Because there will be many problems, existing cases, existing things which are going on. Now it will be applied from the next year. Now there is a new concept that is called tax year. Now there will not be assessment year. Now there will be tax year. So tax year is the same year of financial year. So financial year 24-25. Tax year will also be 24-25. Earlier it was 25-26. So the date which is prescribed, 1st of April 26. According to me, that will be the first day of the tax year, because the new act will be applicable. So tax year will also apply, and accordingly, it will be applicable from assessment year 26-27. So 25-26 also will not be affected. So we have, that's what I said, we have 6 months time to learn all these things and then take decisions according to the new provisions. But basically, the taxation, though basic provisions are the same, almost same. Few things, at least so far as the trust is concerned, I will narrate. Only few things have been tingled upon. That is, we have represented and expect that they will pass. They will act upon that. The provision related to non-profit organization, यार मुझे मैं बोलता ही जाऊंगा. Remind me. They want to bring the significant reforms to the taxation and regulatory framework. Even regulatory framework also they want to simplify it. Then one more purpose for bringing this new bill is to reduce the litigation. And the people who are representing or paying the taxes can understand the law better way. Because after so many, I'll give you example, section 1023C has got more than 28 provisos, or exact 28 provisos. But to understand, I'm saying myself, I have to read again and again. Whenever any question comes, we have to read the provisos. Many other sections, transfer pricing, earlier ADHSC, there are so many litigation and problems were there. Now they want to bring it to simplification. And for non-profit organizations, there were trust, charitable trust, foundation, institutions, and many other names were given. But now the Act is using only one unified name, registered non-profit organization. It covers all. So there is only one unified name. I have just said that his name is Bejayant Panda. He given this, I think you all must be aware since last 2-3 days, media is covering all these things. So on 21st July, it is going to be placed. And he said to the media, it is reported in Times of India, that we have made 285 modifications. And government has already accepted 250. I think it's a good sign. Means they have listened to the professionals, SSC, big houses of all over India. They visited all metropolitan cities and they invited to Delhi also. The whole this period they went on taking and noting and preparing and that, and whatever suggestions are given, what they felt is required to be done, because they have to see income tax side also, because the CBDT and finance ministry is also one side. So 285 suggestions, and out of that 250 he said that already accepted. Means there will be changes which is in favor wherever we suggested. I think they must be implemented, but still we don't know what suggestion or amendment is taken. Yesterday I tried to get something, but we could not, because till it is presented, it is confidential document. Today, now we will study only the original bill. And one thing what we selected the topic, it became the hot topic today. I expected day before they might take, but the parliament is starting on 21st only. On the first day they will take it. So they have divided, now only NPO areas we will cover. They have divided the whole provisions into 7 parts. Earlier the sections were from 2 section definition to 115 TD. Section 10, 1023C, 11, 12, 13. These 3 were the main section, 11, 12, 13. Then there are 115 BBI, 115 BBC, 115 TD, and some other penalties provision where also they are separate, 272A and all. So all those sections they have brought in the serial numbers and one by one, and it is all together. So they have divided the whole provision applicable to NPOs into 7 parts. Those parts are registration 332 and 333 section, 2 sections, income of registered NPO 334 to 340, the total 340, 332 to 355. These 23 sections and one more section, that is definition 223. Total 24 sections are there covering NPO taxation. Then commercial activity, doing the business of a NPO. Then compliances, violations were also scattered many places, they have brought together. Then ATG, that number 6 is 113, 133, 1B2 is for ATG. That separate section is given. And then they have given interpretation. At the end, they have given specific definitions applicable to NPO. Now we'll go to comparative study. So earlier, presently it is 223, that is definition for charitable purpose. Charitable purpose is the same which was earlier, that is relief to poor, education, yoga, medical relief, preservation of environmental and monuments, and the advancement of any other objects of general public utility. It is the same. There is no change. There is no change in the order also. It is the same. And definition is there. Only thing is, earlier it was under section 250. My third column is the old section. There was a proviso. It is still there till 31st, if they pass it. That proviso is separated from definition, and separate section 346 is added for that. So wherever possible, they have removed all the provisos. No explanation, no proviso. Now they will add whenever it requires. Then application for registration. Application for registration. Present section is 332. Earlier section was 12A and 12AB. All procedure and everything has been brought into section 333 and 33. One more section is there for that. So it mandates a detailed registration process with the eligibility criteria, documentation, and compliances verification by the commissioner. Now you all must be aware that from assessment year 22-23, new procedure has come into act for registration. And all the trusts were required for re-registration because it was scattered to all the commissioners. Now it is centralized at the CPC. Centralized number is also given. One way it is a good thing. But that registration provisions were so watertight provisions. If you miss any provision, if you miss re-registration, if you miss any application doing in time, the trust gone. The registration is at risk. They have given a separate table on what earlier it was 12 AB, it has been brought into a table. In that table, they have given what kind of new registration, then renewal, then provisional. We are aware that there is a concept of provisional registration, then provisional to again normal registration, then modification in the objects of the trust. There are 6 situations. And new trust. New trust is also divided into 2 parts, whether activities are commenced or activities are not commenced. So not commenced, you apply immediately within 1 month. Now it is 3 months because of that amendment in the quarter instead of now new concept again added from the end of quarter. So they always see their comfort. Because in income tax, every month they were having time barring. Now the time barring is reduced to 4 months only because of that quarter provision. Anyway, that is not that important. But we know if you apply 30th June, your due date will be after 6 months. If you apply on 1st June, your due date will be after 9 months. End of the quarter. And that is everywhere, I believe. So that table has given the time, application time, in what time they will pass the order, and what is the submissions to be done. That table contains those details, and it is almost the same. There is no much change in that. Now, because of this new provision, who can apply for registration? They have given with heading who can apply, but they have given only these people can apply. Any public trust, society, Section 8 company with no profit motive, they can apply for registration. Then university, earlier universities were exempted. Now they have to obtain the registration. Then institution financed by the government. Earlier, welcome Ashok, come in front. Institutions financed by the government were not required to get registration. Even audit provisions were also not applicable. That section is 1023C, subclause 3, hospital and education institutions. There are limits, 5 crore, and so conditions are there. Now they are also supposed to go for registration. Means they have expanded the registration area. Then persons covered in Schedule 3 and 7. Schedule 3 and 7 are for, stock exchange, depositories, and those kind of government, semi-government organizations are there. If they want to claim exemption, whether under 1023C is a sunset provision. So it will not be there. Mainly, it will not be here in the renewal. Renewal is due by 30th September for most of the trust, because 5 years due date is coming. And to 1023C, earlier who have got the registration, they will be valid till the registration is granted. So that may continue till 29, but majority will not be there from this next year. So those also are required to get registration. Then 1023C, I have already said subclause 3. So these are the persons, now they have to get registration. Now there will not be 1023C mostly, except few cases. Everybody has to go for a section 11 exemption, and registration is to be obtained. Now in section 332, earlier it was 12. Now eligibility. Heading is eligibility, but these are the conditions. Section 332 says eligibility for registration if such person is constituted or registered or incorporated in India for carrying out one or more charitable purposes as referred in 223, that is charitable purpose, or one or more public religious purpose, or both. Means wholly charitable, wholly religious trust, or mix, religious cum charitable. So all the three types of registered trust have to get registration, and they can get registration as per their objects. Because in the application we have to write objects, whether charitable, whether religious, whether charitable and religious. So accordingly, the provisions apply, and accordingly they give the certain conditions are there as per your objects. The B part is important. The properties of such person are held under irrevocable trust. If somebody has created irrevocable trust and properties are held in that trust for the benefit of general public, in that case, if it is wholly for charitable or religious purposes, that is allowed. But if it is mixed, charitable and religious purpose, then only the trusts which are created before the Act, that is 1961, they can get the registration, they are eligible. But in general, all three are allowed under subsection A. B is only for those where earlier irrevocable trust must have been created by the settler. If it is wholly for charitable, they can go. Wholly for religious, they can go for registration. Irrevocability purpose only. So that is, the portion is very small. But it created a lot of confusion. And that confusion I have written in the detail. But it is not so. Majority of the cases will fall under A. Because recently, whatever from 61, after 61, those trusts were registered, and they can either, in any of the three options, they can go for registration. Now, irrevocability clause, I have to say something more than the provision. In the application form, they have asked a question whether the trust deed of the trust contains irrevocable clause. And the option is yes or no. So first of all, this question arises only for the trust. Now, what is the difference? Each are not earlier trust. Now, one name, NGO, is now given, now it will be NGO, registered NPO. Earlier, you can get registration under society, Section 8 company, or Maharashtra Public Trust Act. If there is a Public Trust Act, there are only 12 states where there is a local act is there. Other states are not having. So there they go under the society registration or one old 1860 registration act. They register the trust deed, register of assurance, and straight go to income tax. Nobody is there to check the clauses. Only straight income tax department has to see that. But drafting up those cases, if you want to get income tax exemption, you have to have those clauses which is required for getting registration under Income Tax Act and claiming exemption. If you make any commercial provisions or any provisions which is not permitted, such 11(1)(c) earlier, international activities outside India, and business and other clauses you put, you will not get. So the trust is to be drafted in that fashion. So and you get the income tax registration. See, once the income tax registration is granted, wherever the basic registration, legal registration is done, the path goes to only one road, that is income tax registration, to claiming the exemption. Otherwise, it will be taxed under AOP and maximum marginal rate will apply and single rupee is also taxable. That is why the registration and provisions of registration are required. Because trust, government basically granted exemption to the trust, we will not charge tax. And they put certain basic condition in the beginning. And they go on increasing the conditions. Now those conditions are become so many conditions and problematic.
So if that
Now-
trust is not there, the trust
Yes.
is
Then if you write in the form no, the application itself will not move.
so you have to get it amended.
Yes. And why I am specifically bringing this topic? But rightly, Ashok has said, if you write no, answer. Actually, it's not there. Then you will write no. Earlier, mostly revocable clause were not there. Now in the new trust, we know now they are asking, we are adding that. Earlier dissolution clause also charity commissioner was not accepting. But department says we want dissolution clause. So that dilemma was there a few years back, 5-7 years ago. Where we organized a meeting between the charity commissioner and the commissioner of income tax and you solve the problem. Then charity commissioner agreed, okay, let that clause be there in that trust deed. So that problem is about the irrevocability clause. If you write yes, your application will proceed, but you are giving the wrong information because it will fall under. Hello. Hello. मैं चालू है. Hello. Yeah. Friends, so this care is to be taken. You check the trust deeds. It is not applicable to society and Section 8 company. Because in Section 8 company, there is a provision for closing down or dissolution provisions are there. In society also, Section 11, 12 Society Act, there is a provision for dissolution. Even in deregistration is also there in charity commissioner. There also the provisions are similar to society, but they are not accepting that. We have tried to convince them. Here also it should not be applied because there also the charitable trust act says that unless it is made zero, means all your assets and liabilities are cleared and then they will take it as a deregistration. Or even if it is not there and you can't do it for some reason, that assets and liabilities are taken over by the charity commissioner. So where is question of then the trust taking away that exempted category of accredited income is taken away by the trustees. What is irrevocability clause? The settler, the irrevocability power is with the settler. Now old trust settlers are not there. But practically, I will advise you go and check your trust deed. If there is no clause for irrevocability, at least pass a resolution and submit that application to change that, add that clause in that. And on the basis of that application, they are allowing. At least they have agreed for that. Okay, on the basis of that application, they will allow. And then in some cases, they might ask for the affidavit. Now, re-registration on adoption and modification of the object. There is one provision that if any trust has modified their objects, only objects, administrative clauses, if you amend, it is not required. But one of the condition of the registration said even you have to intimate that also. So I advise any change in the trust deed if you are going, If it is in the object, you have to apply for re-registration because earlier registration was granted on the basis of earlier objects. If you are amending that, then they want to see once again. If it is right, proper, good, they will allow the registration. Otherwise, even in the rules, you have to intimate. But here one important point is there that application is to be done within 30 days from the date of implementation of modification. Because that modification, if it is registered with any of the legal entity, section 8 or society or that will not be obtained within 1 month. In some cases, ROC you can get, but that is also not within 30 days. I don't think it is so fast they can give. Because modification, some registrars, government NOC is to be taken and then the registrar will grant, it takes time. So, how can you apply within 30 days? So, solution for that is practical solution I advise. So when you make these modifications, implementation date should be the date after it is accepted by the registering authority. Say whether charity commission, society or ROC. So that implementation will be accordingly. Otherwise, if you do not apply within 30 days, you are late. Now, since last year, there is a condonation provision has been brought in. Any delay, condonation for reasonable cause is permitted. There are 6 subclauses, 1 to 6, all are covered. They have given facilities for 2 to 6 and still subclause 1 is not yet, utility is not yet available. Section subclause 1 is for those who miss the bus for re-registration. Already existing trust having registration earlier, if they have not registered for a re-registration, now they are unable to get the registration in. There is no any subclause wherein they can apply. We have represented, we have written yesterday only, again we have written to CBDT and Chief Commissioner that immediately it is to be done because September is there for renewal. Next 5 years has come. So, but these are some practical problems. Very few cases are pending. Earlier, there was a condition that re-registration was required to be done where adoption or modification we do not confirm the conditions of registration. If it was confirming the conditions of the registration, then you were not required to reapply. But in new provision, new law, this it's not condition, but this phrase has been removed. Now, every chain you have to apply for this. That is the chain. Now, a small trust. There is an amendment by Finance Bill 25, wherein they have brought into act that for a small trust, the registration period will be now granted instead of 5 years, it will be 10 years. But the condition is put in that preceding 2 years, the turnover or gross receipts are less than 5 crores. So, with this condition, new trust cannot get in the first registration for 10 years because there is no comparative figures available. So that mechanism fails. They will first time they will get for 5 years. Renewal they can get for 10 years. Now presently we are going for renewal. The 30th September is the last date for the registration granted up to assessment year 26-27. Because that is assessment year. We have to calculate from financial year. So 6 months from the end of that financial is to be calculated. So that date is to be remembered, 30th September coming is the last date for re-registration. So whoever is having those first registration, They have to apply in Form 10AB for re-registration, even ATG also. I think if any question is there in between, we can take up. Yes, we do.
You want to be named the trust,
Ah,
which is already registered. I want to give the name, because name is a. Name is already very big,
beg your pardon, name is already,
very big name of the trust. So we want to reduce the name. So do we need to go for re-registration for that purpose also?
of course. Your certificate will be in other name.
Correct.
How can you have to obtain the fresh certificate in the new name. And you have to first obtain from the legal registration, whether ROC, so under society or Trust Act, MBTI. Excuse me, get me one bottle, please. बैठो ना, ये है ना यार, लाया ना एक you keep.
All trust also will have to apply for 10 years.
Yes, you have to apply for renewal. They will grant for 10 years, but you have to prove that previous 2 years. In any case, we have to file for 3 years. But there is one more dilemma presently, 10AB form, because they are asking for last 3 years. Now 25 is not due, still audits are going on, still it is not ready. No doubt till September, we finalize that and we submit that audited accounts. But in such case, we can submit for 2 years, as such hearing has to be taken. So at the time of hearing, you can submit the audited accounts for 25. In some cases, they are asking for up to date. At that time, we'll give that, because they have 6 months from the end of the quarter till March. But I tell you, there will be very hard time for all of us, because September is a due date for presently, but it is not extended. All audit reports are to be filed, 10B or 10BB. All these registration applications are to be done. Their hearing will start. You will start getting notices. All your trust client, you have to give reply and be after them. So be ready for running around. And audits can be taken up in advance. Let us not wait for the extension, because the individual returns are extended for 1.5 months, I think, without asking. So anyway, we can expect, but we should not wait for that. Switching over regimes. Switching over regimes means if you are 11 registration and you want to go for section 1023C or 1023 to 11, that was permitted and that they have continued. But one point we know that 1023 is already a sunset provision, so this will become redundant because there is no question of shifting. Very few cases will be there, but if they want, they can do it. Now 334, that is tax on income of registered trust. Now how the taxation will be done? The tax payable by registered NPO on its total income shall be aggregate of amounts calculated at 30% of specified income. So there is one type of income, that is specified income. Second portion is applicable rate for the taxable regular income. The second concept is regular income. And third is residual. So specified income 30%. Your regular income will be regular tax. Residual also will fall in the regular tax. Regular means normal rate, because there is no specific rate prescribed for NPO. Only individual rates are applicable, because the contents of the laws proves that individual rates are applicable because the minimum 2.5 lakh exemption, many provisions are there, audit is not applicable, filing of return is not applicable. So individual rate is applicable. But if there is a specified income, with the income which is falling under that category has to be taxed at 30%. Then what is regular income? So they have given in section 335, what is regular income? Earlier it was 11.1. There was no concept of normal and residual income earlier. So they have given 3 types of separate income and accordingly tax is to be levied because they found that officers are levying tax in some cases maximum marginal rate, in some cases they were allowing only establishment expenses, in some cases they were allowing amount spent on object of also they were doing. So there were litigation and problems were there. So they brought it very clear cut that this way it is to be calculated. It's in fact good provision. Regular income is received from charitable or religious activity. Received whether capital or revenue. Find it capital or revenue. So even capital receipts are considered now as regular income. Because there are not many cases we know that capital receipts are not taxable, but in the trust case, now it is very clearly brought in. Income derived from property or investment, voluntary contributions and permitted commercial activities. So these are the areas which is considered as the income of the trust. In fact, it covers all, but permitted commercial activities we'll see. Capital we'll see later, capital gain, because there is amendment in capital gain. Now there is taxable regular income. Now how the income is to be computed and how the tax rate will work. Specified is mentioned 30%, so there is no any clarification is required. But so far as the regular income is concerned, the tax will not be charged, means nil income if 85% or more regular income has been applied or accumulated under 342. If you spend same law, there is no change. 35% of the income is to be spent during the year, and excess of that you can accumulate. Earlier it was 11.2, now it is falling under section 342. There also accumulation conditions are the same. Then taxable income, shortfall of 85% of regular income applied or accumulated. Whatever is shortfall, over and above that 15%, 85 means 15%, and accumulation. So that will be taxed. This will be taxed at the normal rate.
In earlier slide, you said the regular income includes the revenue and capital. Capital, you mean corpus?
No, not profit, capital receipts.
Capital
Sale of
receipts.
property, sale of investment.
Sale of property and immovable property is a capital gain, but there are certain capital receipts, judgments are there, those things are there. Now we were claiming that it's a capital receipt, it's not income at all. But the income definition now amended since 89. Their corpus is taken in. Corpus is a separate altogether. And now there are some changes in that as well. But corpus separate, capital or revenue receipt. Okay. So both are to be taken as a income.
Government grants.
And grants are income. It is particularly education institutions. It's an income. No doubt, it is 100% utilized, but it's income. And it's good now. You can gain 15% more. Any more question? Because income is very important. Now we'll see. Now, section 342 prescribe provisions for the accumulation of income corresponding to 11.2 earlier. Legal framework or the conditions are the same. But that we will see separately. There was accumulation permitted earlier, basic 15%, without any investment, without any condition, without any further condition of utilization, of course, charitable purposes only. Then there was section clause 2 of explanation to section 11.1, commonly known as Form 9A. There are two conditions: the income is spent in the next year, or income accumulated which is not received will be taxable in the year of receipt. You are required to file that Form 9A within the due date of filing of the return. And 11.2, Form 10, and specific purpose and the amount and the year, for how many years. Maximum 5 years are permitted, and you have to invest that money into 11.5. But 11.5 investment, immovable properties is also allowed. There are other investments are allowed, but mind it, 11.2 investment should be kept from where you can withdraw comfortably. And you can invest in immovable property, but spending you will require that money. So how can you encash that? So that's a practical care is to be taken. Now, in this new provision, the concept of 9A is not there. It is removed. We have made a lot of representation. At least it is required for the income which is not received. At least spending in the next year, we can do 11.2 or 342 presently. And spend in the next year, because there is no any year in the 5 years you can spend. So that problem can be tackled. But so far as the income not received, how one can spend? So this dilemma is there. I hope they will listen to our request and make some changes. Otherwise, either the trust has to go for cash system of accounting or non-cumulative investment to earn the income for spending. So that situation position is still the same. We'll come to know if something comes out tomorrow or day after. Because if it is passed, then it is a public document. Then it will come into public. So we'll have to wait for a few days. Maybe Monday we can get it. But this accumulation provision is not there at all in ITB. ITB is income tax bill. So I have said that what is to be done in such case, we wait for the change, or then we have to take our own decision for changing the systems on the accounting system. But how Section 8 company can change? It's a compulsory mercantile, ROC. So I think they will understand this position and bring something. Now let's go to specified income. So I have time up to 11. 1 hour. This is 10, yes.
10:45.
Okay, as you say. Now specified income. Specified income is not a new provision, it's already there. It has placed in the one place. Condition, taxation, everything is same. Now, just to brush it ourselves, the specified income is, and see, there were NMS donation was 115 BBC, then TD, then separate violations were there, they brought it together. So at one place in section 337, you can see what are the specified. NMS donations over and above the basic exemption, 1 lakh or 5%. There is a change in that 5%. Earlier it was 5% of total donations. Now it is mentioned 5% of such donations. Now, such donations means anonymous donation only, not the total donation. Total income apart. At least it should be 5% of the total income. Rightly, it was there earlier. Now that word is changed. Let's see. There also we have represented. It should be the same total trust donation. 5% to 5% it is allowed. Then spend for related party. If the trust is spending for the persons covered earlier in 13.3, here also schedule is there who are covered. Because many things they have taken in schedules, many things are they have explained in tables for better understanding. Because once you see that schedule, you will come to know all what is there. Now, if you spend specified income, rate 30% tax. So one is an anonymous donation. And anonymous donation, once 30% is tax, then it will not to be taken in the normal income. It's separate. Then related party payments. Then still the donor is covered. Donors. Applied outside India. If you applied income outside India without taking prior permission from CBDT, specific permission, then it is considered specified income without permission. Now, suppose any university or big college is there, they want to open a branch in, say, Dubai or Singapore. And to set up that, you have to spend the money outside India. Either आगे seat hai, please come. So, unless you take that permission, you cannot spend. You can spend, pay 30%. The 30% is high. Then investment contravention to 350. Section 350 means earlier 11.5. There are specified modes under which investment is to be done. There are some good additions in that. We will come later when you come to section 350. If you make any contravention, that amount of contravention will be taxed at 30%. Earlier it was, the whole exemption was taken away. Then there were judgment that only that part can be taxed. Then there was amendment. So it is clear, only that part of investment will be. But there also, if you, in the next year or in the current year, if you recoup it or you clear it and put it again in the 11.5, then not taxed. So those time limit is given to, because if somebody has donated shares which is not permitted to be invested. So trust will get the shares. Now that share trust has to encash it in the next year or in the current year. Current year or next year. So that much time is permitted to convert it into a permitted good. Now there is a deemed corpus. New heading is given. Otherwise, it is the same. Deemed is, temples, Gurudwara, mosque, church, they have option, whatever donation they receive for repairs and renovation, only repairs and renovation, and they can opt for corpus income and spend accordingly, and they get exemption for that. And there are so many conditions are mentioned within particular year, how to spend, and then whatever they have spent, they have to intimate to the department, whatever that. Basically, this amendment was brought for the Ram temple in Ayodhya. But it is brought for all. Because they cannot make it for one. Then accumulated income. If you have accumulated income under 342, 11.2, and you make any default in that investment or using other purposes, those conditions that you do not fulfill, so that amount will also be considered as a specified income and 30% tax. Applied other than charitable purposes. If a trust applies income other than charitable purposes, and one more condition is added in the even registration condition in the act also. Now a charitable trust cannot spend any income money other than what is contained in their instrument or trust deed. Means as per your object only you can spend. Earlier, because of some high court judgments, it was given that any expenditure which is in the nature of charitable purpose, then it is allowed. So up till now it was, but from assessment year 22-23, those amendments, it is mentioned there that it is to be spent for the only for the objects of the trust. Means whenever some new spending comes, you check the objects whether it is covered. You cannot spend. And donation also, there is similar condition. You have to donate to a trust having same or similar object. Any income determined by AO under section 344, 344 new section, earlier 143, 199. If you are doing any business or business, you have received any business entity, somebody has donated you the whole business. So trust can continue that business. The condition is that whole business is received and separate books of account is maintained. Of course, it was out of the trust, separate books of account must be there. And second part is in earlier 11.4 and 11.4a. 11.4a was saying that any business which is incidental to the object of the trust and separate books of accounts are maintained. That was permitted. But in that case, you file the return. If your case has come into scrutiny and ITO disallowed certain items of that business, he has power. So that disallowance will be considered as a specified income and will be taxed at 30%. So that is another specified income.
The penalty paid on any contravention is covered under specified income.
सब तो allowed ही नहीं है पहले तो. नहीं, but penalty you have already paid.
Yeah.
So where is question of income? It is outgoing spending. This is the specified income. If you do not follow certain conditions, spending was to be done, but you have not done. So they have mentioned all whatever the areas, anonymous donation is income, spent for related party means trustee and their relatives if you have spent that.
It also covered as the outflow only.
That is correct, but penalty so far is there, is not covered in specific.
Inadmissible expense. Inadmissible expense.
That is what I said earlier. Okay, it is not allowable expenditure in any case. Even otherwise also yes. Penalty, even in some cases, some interest is levied as a part of penalty. So that is also a area we just write interest for late payment. But in some cases it is in the nature of penalty. Now, there is one more amendment which is another change, very important. Anonymous donations were exempted to the religious trust. And there are three types of trust we have seen: only charitable, only religious, holy. We are using the word holy. And third is mixed. The question arose whether the religious activity conducted under that mixed category. So there CBDT came out with a circular long back. In that circular, they have said even the mix, there are judgments also. Courts have also said if there is a mix, there is a religious activity, when the exemption is given for religious. So whatever is received for religious, even anonymous donation for this religious activity should be exempted. And CBDT issued a circular and confirmed that, and that was going on. Means presently under the old provision, religious anonymous donation exempted. Mix also anonymous donation, religious purposes were also exempted, and charitable it was not, except at 1 lakh or 5%. Now in the new provision, specifically it is mentioned that that will be allowed only to the holy religious trust. Now after amendment, if the trust having mixed activity, earlier they were claiming exemption of anonymous donation and they were accepting. Even they are having temple or any other activity, boxes are kept for donation boxes, and some people without any name and address, they donate to the trust. Now those will be taxable. So that this amendment is to that extent is not good, not welcome. We have represented now it should be also allowed, because the receipts for that religious activity, ATG apart. If it is a mixed trust, there are conditions, 5% of spending and other conditions are there to obtain the ATG. So that is different. But so far as the taxation is concerned, exemption of anonymous donations is now in the new law, it will be allowed only to only religious trust. वो आपको बैठना है, इधर है सीट, प्लीज कम, इधर आ जाइए, ये चेयर ले लीजिए, इधर आ जाए, ये वन चेयर इज हियर प्लीज, और सिट देयर ना, कोई भी आए खड़े का कोई इधर, प्लीज कम. I am happy that people are standing. No, this is what is your साहब वो ठीक है, मैं जो बोल रहा हूँ वो उसके कॉन्ट्ररी है. आपका जेबी नगर स्टडी सर्कल का, that is why it is considered number 1 study circle of India. And the highest number of members, vibrant and selecting good. I am not boosting myself. Convey just me. Good speaker and topics which is of current nature. The next one also, I inquired what that Padma Shri. First I thought it's a Padma Shri award. Then I said, no, she is handing. She's here, not yet come. But she's going to speak on certifications. So I said, that is an interesting topic. I will stay to listen. See, it's a good. I congratulate the committee and that selecting such things, and the members. See, I tell you, if attendance is not there, then what? Whether the committee will be interested? No. If there is a good response, it is because of you coming, attending in so many numbers. Okay, all the best for going for a bigger halls. I think, yeah. Because bigger attendance, more members, bigger mementos. Yeah.
Anything related to local registration is there in this new bill?
I think please repeat.
The
Please repeat.
local registration of the NPOs, is there any?
You see, in the, it's a good question because recently it is going on. There is no compulsion in the law because income tax is separate. Other provisions and other laws are also there of the country. Other ministries, they want such things. Earlier, it was compulsory for only those trusts having FCRA registration and getting government grants. The two were mandatory. And mandatory to the trust. If you want that, you have to get it. Not for all. But I think in 23, government passed one PMLA amendment. In that PMLA amendment, it is mentioned that RBI should see that all the NGO charitable trusts are having Darpan registration. PMLA. After 1 year, RBI realized that there is such responsibility or put on us. So RBI, yeah, they took 1 year to realize that. RBI then issued circular to all their banks that it's a made part of one of the KYC for every trust. Now all the banks who are having your accounts have started issuing letters and notices to the trust. And very short time, 8 days, 15 days, if you do not submit the Darpan registration, your account will be freeze.
They have.
No, yeah, there have been so many.
Yeah.
We wrote to RBI, at least you give some time. From this date, it will not be there. And particularly, I tell you, HDFC, I have realized in my practice, they are immediately freezing. So, it is not made compulsory, but for all practical purposes, it is required now. Your bank account, you have to pay KYC, you need to have. And one more thing in Darpan. Once the registration is there, you have to give the trust details plus trustees details. If there is a change in the trustee or trustee details, you have to intimate to Darpan as well.
Change report.
Change report like. But it's online. But you see, we must know that. Because one more compliance has come. Darpan, and at that time, the Darpan registration site was crashed. Because it was not moving at all. Anyhow, now that is diluted, now it is almost solved. Every trust is having, it is not compulsion otherwise, but made it indirectly compulsory. And good, you raise this point. Because changes also to be informed there, so that you keep in mind, please.
Amount spent for the benefit of the related parties, that is a specific income. But the trustee's daughter, if she is appointed as a manager, she is qualified to render the services. They can consider it.
No, if it is reasonable and really she is giving that services, mind it, really. On paper, then it is, we cannot advise such thing. But if it is really, and if reasonable, if she has the degree or she has some qualification, or even experience is also covered in some cases. Case court has taken that into account, and then it is reasonable amount is allowed. Only reporting is there. In our audit report, we have to report, that's it. Now, as per rule 17AA, maintenance, keeping and maintenance of books of accounts, I think that is also a very detailed rule for the charitable trust. Even I think listed companies have also not to maintain that much of carefully details. And if you are not maintaining as per rule 17AA, where so many things are to be mentioned, accounts to be kept for 10 years, You have to keep separate every year, separate either printed or in any digital form. All the entries, mainly this is to be kept in mind, and you tell the accountant of your trust client that entries in the tally or any system they are maintaining, it should contain full details of the transaction. To whom it is paid, why it is paid, how it is paid, what is the purpose for which it is paid. Paid check, check number, purchase something. No, full details are required. And it is good for trust also because you have to maintain the accounts for 10 years. You cannot have those details after 8 years or 9 years. At least that account will speak for what you have spent. And it is necessary for our audit as well. So that if non-maintenance of books of accounts is also covered under specified violation, that can lead to that trust to the cancellation. So now any activity or any act or not doing any act, if it leads to cancellation, it's a most dangerous situation for charitable trust, and particularly the trusts which are having immovable property. Because if there are so many other conditions. One of the is this, that if you are not maintaining books of accounts is also violation, and if that violation is incurred, proceeding will be taken. If your registration is cancelled, then section 115 TD, now I think it is 356 new section, will apply, wherein assets minus liability will be treated as accredited income, and calculating the assets, fair market value of the assets is to be taken on that date. So the market value of that asset, suppose a trust is having a building or a school, they'll lose their registration or do not renew, or they miss the dates, or for any reason they have no registration. It is not only cancellation. Now withdrawal is also covered in this new, I will come later. If you withdraw, earlier the cases were there, it is not cancelled, we have withdrawn. It's a logic. But now it is amended, withdrawal is also covered as a cancellation. So their market value, suppose that in book value is say 25 lakhs, but the market value is 25 crore. And they lose registration. Calculate 30% of tax. And what liability can have trust here? Generally liability is lakhs. Yeah, but it's very harsh provision. So we have to see that none of the activity or none of the provision or none of the things not doing, that is also there, should not lead to cancellation proceedings. So trustees and we all have to take care. It is number one, there should be clause in the trust deed, means your trust deed should permit. There are cases even trust deed is not permitting and you are paying is permitted, but now it should be there in the trust deed. Second thing is reasonable amount, actual working, and third, really that fellow is devoting time. It can, yes, it is allowed. Say professionals, I tell you examples. In particularly hospitals, doctors are trustees and they are giving their services. So they are being paid for that. But it should be reasonable. If you are paying others 10,000 per hour and here you are paying 25,000 per hour, then that is not workable. So reasonableness is to be seen, and again, I am coming back to rule 17AA. The trust has to maintain the record that they are paying reasonable amount, and what are the proofs and documents on the basis of you deciding that it is reasonable. Maintain register as well. So now the responsibility is casted on the trustees. But it is allowable. Experience also is there. But only thing is reasonableness, reporting will be there, those litigation may be there, but it.
Normal doctor is providing for these services, but the entrepreneurship comes into picture. The 10,000.
That is the trust has to prove. You have to prove that it is reasonable. Something. See, proving is that is on our shoulders. It is they will disallow. Now you have to have means check other hospitals, ask them कि भाई दूसरे doctors को क्या देते हैं, what you are paying to other doctors, whether it is special something or super specialty is there, or he is बड़ा degree from US and London and all that करके आया उसको इतना that you have to establish that it's reasonable. Otherwise, that excess payment or full payment will be disallowed, will be specified. Yeah, coming to 337 section. Any anonymous donation research, and this we have covered. Only religious, CBDT said partly 50% related. See, in 115 BBC, there was a proviso was added that if it is given without direction to any trust for the purpose of that money is to be utilized for education or hospital, then that will not be treated as anonymous. But that provision was really, practically it was not that clear. If somebody is donating to you or saying something, so there is a direction. But you cannot prove there was a direction. But if it is for that purpose, then it was not considered anonymous. Now that condition has been removed in the new provision. On this 337 we have already covered. Now income not to be included in regular income. That is income applied outside India with the permission. So that is now allowable. Corpus donation are not included in the regular income with specific direction. Same provision, if there is a specific direction that the donation will form the part of corpus of the trust. I say, be careful, use the word in the letter, corpus word. Because there are certain donations they give you, okay, this is to be spent for, say, prizes to be given, for old people, for cancer treatment. Also, cancer treatment will be normal income. But there are certain specified, their corpus word is not used. Because the Act uses the word, the direction is given to be used for the corpus. It is donated for the corpus of the fund. So let it be corpus, and the corpus conditions we see in the next 339, it is exempted with the direction. But there are certain more conditions are added, that is in 39, donations with a specified direction and such donation are invested or deposited in the modes under section 350. So 350 is nothing but at 11.5. So a specified mode you have to invest that money and you have to maintain it. Once you have invested, then you have removed from there, then it is not maintained. So practically corpus donations, if you want exemption, then permanently you have to keep it invested in 11.5 modes. There are questions arose whether from one mode to another mode can it be done. I said yes, there is no restriction. You have invested in fixed deposit, now you want to invest in mutual fund. Or now you want to invest in immovable property. That can be done. Because I foresee that once you encash that, so where that money goes, it will come into bank account. So bank balance and bank account is also considered investment in 11.5 or now 350. So it is continue to be invested in 11.5. Then from there you purchase anything or invest into another system, another option of investment. There is no restriction. And so far there is no any case law or addition is made in such cases. Now, if you utilized corpus, we'll see later because the application of income is another section. You cannot claim application will not be allowed, and if you redeposit or replenishment is done in the next 5 years, then the year in which you have redeposit, you will get the application. Deemed corpus. Deemed corpus, we have seen that temple, Gurudwara and all that, they receive any donation, they have option to treat it as a corpus. So that is we have already covered. And there are conditions, they have to maintain those conditions. Then otherwise, if they miss those conditions, the year in which you miss that corpus will become a normal income of that year. Now, application of income, the most important part. The earlier was the application means spending, which is allowed as a deduction. Where the word is used, application of income. Because the application is wider than spending. Application of income is earlier also it was on actual basis. From I think 1/4/23, it has been made. It is allowed only on payment of actual payments. Whatever payments you have not done or provisions you have done will not be allowed as application of income. But in books of accounts, practically what we do, normal books of accounts are made, provisions are done. But at the time of computation, when we are computing the taxable income, like earlier, depreciation as per Companies Act and depreciation as per Income Tax Act, we used to disallow and add back. The same thing is to be done here. Whatever the provisions are not paid, even the liabilities are also there if it is paid. If it is separate business is there in that computation, it is to be done. That will be added. And for earlier years, provisions, if you have paid in the current year, will be allowed as a deduction in that year. Because the expenditure or application is allowed on payment basis. The year in which it is paid. And rightly so, there are some problems, but there are many trusts to save the taxes. Earlier, they used to pass provisions, big provisions, and not paid for many years. So it was caught-free. Anyhow, it is on payment basis, spent for charitable or religious purpose for which it is registered as per your objects of the trust mentioned in your constitution.
If any advance payment is paid for that specific.
Yes, can be. That is what is payment basis. When you are not allowing liabilities, so it should be allowed. Clear logic. TD.
We are doing a protected system, advance payment for the expenses. As per the protected system, I will not allow.
Please.
As per the accounts, the mercantile systems we are expecting, no?
Mercantile.
Mercantile systems. So that all that adjustment we have to do in the computer we know.
Correct. The books of accounts is done, audited. As auditor, we will ask. And section 8 is company law says you have to make mercantile compulsory. So it's now become all set. Every year some liability is there and previous year's payment is done, that is allowed and this is not allowed. Only thing for clarity, if you change your some presentation in the balance sheet, I did from the year one. Provisions separately you show for previous year, for current year, paid for the current year, so that immediately you get the figures. And for department also, they can verify immediately. This is the same, only presentation. Now, third is TDS and cash payments provisions, which is 40A1A and 40A3, which is disallowables, will not be allowed as application to that extent. 85% of the donations to other trust. Inter-charity donation. If you donate to another trust, only 85% of that donation will be allowed as a deduction. Application, that is. No application on corpus donation to other NPOs. If one trust out of its income donates to another trust as a corpus donation, so that will not be allowed as an application to the donor trust. Receiving trust, there is no problem. He can receive corpus, then as per the provision of the corpus, they will get exemption, not get it. So other application that is invested or deposited back in 5 years, that is for any corpus donation which is deposited back will be allowed as a deduction in the year in which it is replenishment. Achha, not allowable. Now there are certain very clear-cut specific part 3 it is there, that is not allowable claims. Now depreciation is very clear, the same provision. If the capital expenditure is claimed as application of income, the year of creation of that asset will, then in those assets depreciation will not be allowed. Set off and deficit, there is an amendment, so that is not allowed. In any year, if the trust is spending more than its income, then that deficit cannot be carried forward and will not be allowed as a deduction. No application if applied for out of corpus, loans and borrowings, accumulation income and deemed accumulation income. So out of these 4 types of income, you will not get deduction for application of income. Out of borrowed fund, not allowable. Out of corpus is also not allowable. Accumulated income, because you have to spend for that specified purpose, you cannot donate to other. There is a condition. Earlier also 11(2) and now also in 342. Even deemed accumulation. Now there is one more, that is 343 will come in the next slide. Accumulation income 11(2), it is a regular income. Now there is a change. 11(2) earlier there was no bifurcation which income can be accumulated. Whatever the gross income is there, even capital gain was also allowed to be accumulated. Though there was an exemption was allowed if it is invested in the another creation of capital asset will be allowed as a deduction. That provision is also gone in the new bill. As on today, it is bill. So capital gain now is become will be a normal income. But here it will be allowed. Accumulation will be allowed only on regular income. Regular income is defined, we have seen earlier. That income only accumulation can be done, only on to that extent. So this is the change in that, and accumulation can be done only out of regular income. That is now 342, earlier it was 11(2). Now there is one more new concept, deemed accumulation of income. You know, earlier that 15% what we used to claim out of the gross income, that is 85% is to be spent indirectly, 85% means the 15% is to be accumulated. So in that case, that 15% was free of any investment, free of any could be anywhere you were allowed to spend it. Now that 15% is to be named as deemed accumulated income. So the word is used. It's not deeming provision, but deemed accumulation income. That 15% will also be treated as a deemed application, deemed accumulation, and this 15% is also required to be invested in 11.5 or 350 section mode. So that 15%, now they want that some record is there, you are investing in 11.5 or 350 section, new section boards permitted. So this is one change.
So if it is lying in saving bank account.
It is considered. Bank balance is also, only risk in the bank balance is if you reduce that balance. You have purchased some property and you have made the payment. So then specified income. Now, commercial activities we have already covered. If any business undertaking is donated, the trust can continue that separate books of account audit if it is applicable. According to me, 44AB is applicable. And safer side also, we should do it. Business. And 4A means incidental and separate books of accounts maintained, that is also permitted. Same in the new law, section are different, 344 and 45. Because I have 5 minutes and indication is there, so that I have to finish it. 5 minutes. So restriction on commercial activities for GPU, that is general public utility, the same earlier provisions which was provided to 215. Now that the same provision has been brought into separate section, that is 346. Books of accounts we have covered, audit we have covered, audit is applicable if the income is more than 2.5 lakhs. You see, the act is not increasing that limit. 250 is there still. Up to 7 lakhs, up to some 12 lakhs for senior citizen and all that, and there is no tax liability. But the basic limit is the same. So that in the trust, all provision basic limit will apply. So where audit is, if the gross income including corpus, people do the mistake not calculating the corpus as a income for the purpose of finding out that minimum exemption limit. So if it is the income is more than 2.5, then audit is also applicable. A small trust where the income is less than 5 crores, 10B, and bigger trust, 10BB. That is audit report format. Return of income. If the income is less than 2.5, you are not allowed to, means you are not required. You are allowed, but you are not required to file the return. But all practical purposes, we should file, because if there is a TDS, so you have to file the return to claim those TDS. Permitted modes of investment almost are the same, but two good additions are there, which I want to add here. Jewelry and furniture. If it is received as a donation by the trust, can be retained and maintained in the same form, and it will be considered as invested in 350. So this is a very good welcome, because people, Siddhivinayak, Apna, Sai Baba Trust or big trust, they get all so many gold and ornaments and everything. So they had to sell it compulsorily. Now it is not so. It will be considered as a investment in permitted gold. It's a very good change, welcome change.
Sure.
Or even power given to CBDT to prescribe any other such mode. Then certain long-term finance, public company, urban infrastructure, immovable, some business property, incubator and incubatee, all those new terms are being added for these investments, and they are defined what is there, and that is very clear. Means there is an expansion in these modes, and particularly I wanted to cover these donations received in furniture or particularly jewelry. Now, accreted income, we have generally in the my topic, I have covered that. That is very dangerous. That is levied 30% of tax. Now the section is 352. Earlier it was 315 TD2 TE. Market value of the assets minus liability is to be taxed at 30%. And not only the cancellation, withdrawal is also covered, as we have seen it earlier. Now this registration. If you do not re-register, that is in 21 from assessment year 22-23. If you do not renew that registration, second one more condition. If you do not that change in the object of the trust, if you do not reapply for getting the re-registration, provisional to regular is not covered because you will lose the provisional. Provisional is temporary. Registration is given to you. There are time limit within which you apply and get the regular registration. But other three conditions, if you do not renew, do not obtain, or do not re-register, that condition is also covered under the 115 TD. That new section is 352, where the proceeding can be started. Another thing, I am seeing in few assessment orders, AO while passing the order, in the order is calculating accreted income and calculating the tax payable by the trust. In one of my case, everything is allowed. Income is nil. Demand note is nil. But in the order he has calculated accreted income. Now, that is lying in the order. There is no demand. Who will do the proceeding, or whether the ITO further send the notice? There is no clarification. Even the law also there is nothing. But now it is very clear. ITO is given that power, and recommendation is also to be done by ITO. And the word is used, ITO shall intimate to the commissioner if he finds any specified violation, which leads to cancellation. So he has to send a proposal, and he must, the word is used, he shall. So in that case, he will send a proposal to the commissioner for the cancellation. Then commissioner will decide whether to cancel or not to cancel. He'll give opportunity to the SSE to being heard, and then. So other violations is also very important. I'll take few more minutes. Convener sir. Okay. Earlier immediately I can stop.
Continue, sir.
Sahib beta ji aaje. Thank you very much for coming, sir. My pleasure to be. Other violations, fails to maintain books of accounts, fails to get accounts audited, fails to furnish ITR, and carrying on non-permitted commercial activity. So here these are all other violations. In these violations, there is a separate calculation is given under section 1310. That all the expenditure except capital expenditure, depreciation which is not allowed, EDS provisions which are applicable will not be allowed. Donation to other trusts also will not be allowed as application of income, and the net income is to be calculated, and that will, on that normal rate tax will be levied. In fact, the 1310 is a welcome, very good provision, because in some cases, the ITOs were charging the tax on the gross receipts, In some cases, they were allowing establishment expenses. In some cases, they were allowing even application amount spent on the object of the trust also. So there was confusion. So that government said we give the formula for calculating, computing that income under that section, and the tax will be levied. And mind it, if you have not maintained books of accounts, fails to get accounts audited. So if the audit report is not there, you file under 1310. Only thing is on that income as computed, the tax will be levied at the normal rate. ATG, it is almost the same. There is no any change into that. Only thing is in the 25 Act, it is added as a proviso that condonation will be, power is given for section 12A1 AC, subsection 1 to 6 on 6 positions. If there is a delay in filing application or reasonable or merits, the commissioner can grant the condonation, and it will be treated as a file in time, and accordingly they will grant the registration. And a similar provision is not there for ATG. That condonation, though in the memorandum explaining the provision, they have said that these are the problems, and in ATG also condonation should be there, but in the Act it is missing. And not only missing there, in the new Act also it is not there. So it means it is not missing, it is purposely they have not given. I think I will sum up here, because there are certain interpretations which we have covered. There are various schedules given in which those things are being brought into separate schedules. You can find out which schedule is applicable, and you can see the dates and the applicability, all those things. I have given certain my comments at the end. Interpretation we have seen, schedules are there. Some I have given certain comments, particularly whatever the amendments were there up till now, they have already incorporated. Whether new bill will be existing trust to obtain the registration again. There was a doubt that whether in that 5 to 10 years provision has been done. In that case, whether re-registration is to be done or automatically it is granted for 10 years, but the wordings of the amendment is such that you have to apply again for this. And on the basis of that application and verification, they will grant to the small trust for 10 years registration. Then another one more point, capital gain we have covered now. Capital gain, that exemption of create out of the net consideration, not gain. If it is invested in creating another capital asset, the capital gain was exempted, like house property 54. Now that is not there. So now the capital gain will be considered as an income, and accordingly accumulation and working is to be done. Inter-charity donation, we have seen that 85% donation to other trusts, it should be for the similar objects or the same object, it should be there. You cannot donate to any other that, and even to you have to donate to the registered trust. Now, this last point, applicability of case laws. Since the basics of these amendments, not only NPO, even other income tax acts also, it's the same. So even in the new act, according to me, according to my opinion, those case laws will apply. Those decisions which are there, for which the changes were made, or whatever are there, will be applicable, because you have framed, simplified, and those things have been done. But one of the principle of making these changes is that the basic concept is kept the same. So if it is the same, then those should also be applied. This is my view. There may be a different view also. Thank you. I think I have taken excess time. And whatever questions were there, I have covered. You can send me thank you, sir. My email ID is there. You can shoot me any question if you want or any help you want in this connection. I am there. Thank you.
Thank you, Vipin sir. Friends, please we will continue our next special session on AI. But before that, there are some announcements and I request our past convener Sri Maheshji Manager to give a brief also.
Very good morning, friends. It's 11, please wait, because the Koinur has gone into renovation and they had requested some delay in the breakfast. So breakfast, another 20 minutes will be there. So they have gone for total renovations. And this is the first meeting over there. We requested in between they are arranged. It's not fully completed. That side, all pool has gone. They have flattened it to cover more crowd. It's open to sky. Now 1,000 people they can cater inside and outside. So that they are starting on 2nd of August. So our next meeting will be fully new Koinur will be seen. Here after curtain, this is a curtain, this is not a wall. Next time you will see that it will be open for the breakfast and platform is there. So directly serving will be done from here. So a lot of changes are done. So some Kailash ji ne kaha bhai kuch good announcement kar do. So I am here. The first is of course tax money sitting out. उन्होंने बोला पहले मेरा करना. So इनका online subscription is there. For 1 year they are offering 15% discount, 2 and 3 year 18%, and on books it is 35% for today. So those who want to have, they can. And another good thing is that per the demand of the various members, we are starting the study group again from the next month. So this will be 4 CP hours per month. And the first series will be started with the AI. आजकल AI का ही जमाना चल रहा है everywhere. And our team expert Dinesh ji is here. So first 2 sessions will be on the AI. And we have kept a minimum fee of ₹1,000 plus GST. The forms will be sent to you on WhatsApp. Those members, already though are existing members only allowed. If they want to opt for a study group for the year, they can do so. This will be a 4-hour meeting in single day like this only, not to 2 hours. And the much awaited picnic for the year, हम लोगों ने इस बार थोड़ा जल्दी कर दिया है. 15th September तक अपने को written filing dates are there. So after that, members wanted the relaxations. So on Sunday, 21st September, we are keeping a picnic at Silent Hill Resort Manor, that is on the Ahmedabad highway, 1.5 hours from Koinur. So that for that also forms will be sent. Silent Hill Resort is a very good resort. Earlier we had been there twice. So, and the first time, 20 past conveners with their spouse have consented to join the picnic. 20 past conveners with his spouse, they already consented. And now 15 minutes is there for the breakfast. So Tejwani sir teams and our past convener Seema Mehta has prepared a presentation on AI AI की झलक दिखा के कैसा करना है, कैसा होता है, PPT में कैसा होता है, क्वेरीज आती हैं तो कैसे सॉल्व करना है. So it will be very useful to the chartered accountants. And I request both of them to please come here and present for the same. Thank you very much.
Laptop.